All right, guys. So we've been lean, like a lean Sigma 6. Sorry. So we will start our daily bias with identifying the daily time frame. And we didn't do this last time, but we can identify the PD array that I believe we're trading in, right? And your PD array is always going to be your highest point to your lowest point. Remember previously we believe we were trading in this PD array, which we were, but then once we traded lower, then the PD array became this. Now the PD array was this. So now this is our PD array, our premium and discount array that I believe we are trading in going into the rest of this week. Right, this is our PD array right here. This is where I believe price is being governed by on the higher time frame. I believe this is where price is. If we look at the low point, once we came up above the 50%, which I talk about a lot, we traded lower but failed to trade back into the range of this lower quadrant or this lower quadrant, lower half. We failed to trade under it. We came up. I believe this was Netflix earnings here, and then we gapped up overnight, right? We created this gap, and then we came up even higher, tapping into this volume imbalance here. So if you guys don't know what a volume imbalance is, it's an island. So this is called an island where you trade away, right? Away from price. We did it here too. We created an island. This candle was an island because we traded away from price action and we left the gap. So what we did was we filled this gap with trading, but I believe there's more to be done. I think we're going to come into this and trade into this IRL and then attack external range because you guys know what next week is. Well, I mean, it's kind of a big thing to say, but next week is Tesla earnings. Next week we have Tesla, which is, I believe, on the 29th. So I think what we're going to do is we're going to play around inside of here. And then I believe Tesla is going to take us up. Because I believe the same week we have Tesla, I think we also have like Microsoft and Apple. And I think there's some other big players in there, right? But I think those tech stocks, like we talked about last time, the tech stocks are leading the market right now. I think the Tesla is going to pump up Apple. Apple is going to pump up Tesla. Microsoft is going to pump up the other two. I think Nvidia earnings isn't next week. I think it's next month. But I think Tesla is going to supercharge the market, especially with Trump, back to all-time highs. And our higher time frame, our higher time frame flip zone or our higher time frame um, bullish and bearish, we've hit it already, right? But that's the higher time frame. When we drop into the lower time frame, we still have to identify what key level we have, where we want to be bullish and where we want to be bearish. So mapping out the 1 day PD array that I believe we're trading in is the all-time high, which is 22,470, all the way down here to the low of the 13th. So we have our PD array we're trading in. We'll move it out the way so we can draw. But we still want to be able to see it when we chart. And remember, every candle's a day, so you don't got to make your PD array this big. You can just do it one candle, right? Because once we drop into the lower time frame, it's actually way larger. So obviously, like I explained, we're bullish, right? We've been bullish for quite a few days now. Tapping into this volume imbalance, I think we're going to use this volume imbalance as a crutch to go higher once we trade back above it. So let's go to the 4 hour and let's look for a reason to stay bullish. See what we got here. You guys are just talking. Is that tomorrow, Drizzy, the news? Jobless claims, crude oil inventories. I think that's news for tomorrow, guys. 1,000 orders. Oh, damn. 1,000 below. I like that. So we're going to look for a reason to keep us bullish. So what would be a reason to keep us bullish, seeing that we tapped into that higher time frame PD array, right? Which was Pam's level of the 26th high, right? Which was 112. We tapped into that higher time frame PD array. So tapping into that leads us to a change in the order flow on the lower time frame. But from a 4 hour, right, we have this big bullish run up where we created gaps, we created fair value gaps, and we created a whole mess of stuff on the lower time frame. But on the 4 hour, what looks um, possible for a drop or for a continuation of the rally? As of now, we have tapped into this 4 hour fair value gap, right? This is our 4 hour fair value gap. We've tapped into it and we're now trading inside of it. In order for me to remain bullish off of this 4 hour fair value gap, we have to trade above it on the next 4 hour candle. So we have an hour and 21 minutes. So in an hour and 21 minutes, what I would like to see is for us to break out of this high. If we do not break out of this high in an hour and 21 minutes, I'm going to expect price to drop lower and attack something down here to go higher, right? So again, I want to see this 4 hour fair value gap trade above and we have an hour and 20 left, and this level is 976. And then here's our 4 hour fair value gap low, right? Which is at 907. So below 907 for now overnight is where I want to be. Look for more shorts, and then above 975 is where I want to look for more longs overnight. Just overnight trades. If I wake up and I look at price and I see we're under this, I want to look for shorts, right? If we're above this, I want to look for longs. So looking at the 4 hour, like I said, we're trading inside of this, so we'll leave these two key levels. But we do have an implied fair value gap. If you guys don't know what an implied fair value gap is, it's basically when there's a big giant wick, but there's still no trading on this side. You have this low here, and then you have this body. This would be your implied fair value gap, where a fair value gap would be, right? This to this would be your implied. It's okay that there's a wick, but this would be a fair value gap if there was no wick. So that's another fair value gap to look into, right? And then we have this bad boy, which is our volume imbalance. And the volume imbalance is sitting at, let's see how many from where we're at. The volume imbalance starts at 151 handles lower than what we are actually at. That's a very far drop. I think that's a very far drop if we are going to retrace. I think that's too far. I think we're too bullish. We talked about it earlier. I think Netflix propped us up really high, and it's going to give us a continuation over the next couple of days. Again, with Trump being in the presidency, there's no telling how many other executive orders or people he's going to piss off or cryptos he's going to make. And I think recently Bitcoin got close to all-time high again. So, we could possibly see another run, like I said, to all-time high with Tesla. So what I want to do is I want to map out this implied fair value gap low. And this is where I would like to see us bounce, which is 851. So I would like to see us continue our bullish structure, but give a little shorts until we continue higher and attack yesterday's high. So one of our scenarios is drop down to 851 to continue higher. So now we'll go to the 1 hour and we'll look and see what targets we have that are possible to keep us bullish. But as you can see, we already have some pretty good reasons to be bullish, right? We can bounce off the low of the fair value gap. We can bounce off the top of the fair value gap, and then trading underneath the fair value gap of the implied fair value gap, right? We'll target lows and we'll target the session lows, which will be these bad boys here. This one, and then this one. Then we also have equilibrium of this range, right? Equilibrium of this range is going to be somewhere around here. We're not going to map it out perfectly, but would be like around here would be the middle. So 659 would be a good target if we were short, right? Right down here. So if we're looking for an actual change in order flow from the 1 hour, right, we need to confirm a break underneath this and a break underneath this. That would give us our market structure shift to where we will come back up and either fail to take Asia or come back up and fail to take previous day high to continue lower, which makes sense with market structure, right? We fail to take the high, we create a lower high, which shifts the order flow. So our second type of trade is going to be, our first trade is going to be bounce off of that fair value gap high at 851, I believe it was, 849, whatever this is, 849, right? Bounce. Our next play is going to be what? We're going to confirm the change in order flow and we're going to drop. And then our third type of play is we're going to come back up. Equilibrium is around Asia, right? If we do the daily range, which we'll map out right now, is we're going to trade higher and bounce off of equilibrium, take the high, and continue to go higher. So these are the three scenarios I have for overnight. And depending on how the market reacts to these three scenarios is where I'm going to take my trade. So if we erase this and we know what our scenarios are, we'll erase these bad boys too. Let's map out the daily range as a PD array so we can get a correct idea of where the equilibrium is, so that way we can use equilibrium as our crutch to go higher. So it looks like equilibrium was actually a little lower than I thought, and we're trading right above it. So let's get rid of this real quick. We'll get rid of this, and we'll get rid of all this, just to see where we're sitting on equilibrium. So we have kind of confirmation, right, of one of our trade ideas, which is what? Use equilibrium to go higher. So again, we'll go back, we'll put all of our levels back up and our PD array. Equilibrium is here. It was right below this. And our scenarios are drop to the implied, drop and go lower, and then go higher. Three scenarios. Once we take, if we do take this bad boy out, right, then we're going to aim for PAM's 112, right? We're going to aim for that 112 level. That'd be a good target. And then the next target after that would be London low down here, and then finally up here. Pretty big movement. If we take previous day high, this is a possible sweep area, 112, just because it is previous day high. And when we take a previous day high or a previous day low, we like to offer a retracement or a reversal. So it's possible that if we do continue higher here, when we hit 112, it'll create that break of structure, right? That break of structure, and we'll come up and we'll drop and we'll fail to trade where? Underneath equilibrium. And then we'll continue higher, break a structure, fail to take EQ, break a structure, fail to take EQ. And when I say fail to take EQ, what I'm talking about is failing to take equilibrium of the new range that we create. Right? When we break structure here and we go lower, the range that we created, which is the new low to high, we fail to take EQ, right? The new high to low, fail to take EQ, the new high to low, right? Fail to take EQ, and so on and so on. But what we're looking at is the craziest bullish order flow, right? Like this thing is crazy. Giant fair value gap, tapped into it. Giant fair value gap, tapped into it. This is kind of like a slowed down structure, but this is really sped up price. This was news, I think, news, and then we had that Netflix earning. So if you guys don't have any questions, I'm going to stop it. We'll look at this real quick. Nothing up. 897 is the old weekly high. How do I feel about 21,700? So 21,807 is one of our levels, and then that equilibrium, which is 21,659. So 659 is what, like 40 points away from that 700. And then we also have 800, 750, and 700. Right? If we look at those three numbers and we look at our targets, we actually have a target down here, way down here at 529, 655, and 798. That's pretty spot on. 798 close to there, 759 is close to that, and then what was the bottom one? 758, sorry. and then 525 was the lower one. So that 800 and 750, we have some session highs and lows there. 700 is going to be right here, which is the fair value gap that took London is 700, but our level is 58 because that's the equilibrium of that range. So we do have targets down there, Dick, so that's good. We have, targets in the same area as the Bookmaps. Bookmap has not steered you wrong, and from what I've seen, it's a good indicator of where price wants to go. So we could be looking at that one of the two possible short scenarios, right? Where we drop down to that inverse fair value gap, which is at 850. Was 850 1 year levels, Nick? So 800, 750, 850 is not 1 year levels. So 850 is that implied, right, to take us higher. If we go lower, we do have 800 here, which is 805. And then if we continue lower, like I said, we got 658. So that falls in line with Bookmap. These orders can be gone by tomorrow. Yeah, no, you're not wrong. We could, drop down and then come back higher, failing to take this low out and this low. Which confirms our bullish order flow. So it looks like, according to bookmap levels that Dick has, it looks like shorts may be the play. But if you guys were in the chat earlier, I mentioned how, let's go to the 5 minute and let's erase everything. I mentioned how, trading above Asia confirms the change of order flow. And if we go to the higher time frame, it makes sense, right? So we'll see what happens overnight. But for now, this is what I got.